Shay Russell from mining.com.au, and I'm coming to you from Resources Rising Stars once again. Standing next to me is one of my favourite people to talk to, and that is Sean Russo, the founder of Noah's Rule. Sean, great to see you again, mate.
Nice to see you, Shay, and a great conference.
Yeah, awesome conference. Now, I know you've come as an investor today and not representing your company, but nonetheless, I still want to talk to you about what Noah's Rule does. Now, you obviously help gold miners hedge their product, but tell me, what's the hedge market look like right now?
Well, I think it's bifurcated in as much as people who did hedging some time before, maybe they've got hedges at 2,800 Aussie and today, it's much higher. They may be regretting it, but people who don't have any hedging who are looking to build new mines, we're getting quite a lot of inquiry from people, particularly overseas, looking to maybe develop mines in Africa or something that are putting a financing in place. They're going to need to do hedging to support that financing. At these prices, those financings look very good. So, and I think the people who've got the hedging at the lower prices just need to chill out and kind of remember the reason they did it was to avoid issuing a lot more shares to raise money at a lower price. So I think I said to you before, the cost of hedging measured with glorious hindsight has to be measured against the value of dilution avoided. I mean, that's what debt and hedging is all about for most mining companies. It's about reducing the number of shares on issue, because we all know in the long run, best share price appreciation or the fastest share price appreciation comes from the companies with the fewest shares on issue.
That's an excellent way of looking at it, because sometimes analysts can take a negative view towards hedging.
Lots of times.
Yes, lots of times. But you're right, it's about minimising the dilution for your investors.
Yeah.
Tell me, with gold at knocking around $2,500 per ounce, how many people are coming into this market to hedge? Like, there's a lot of people making very bullish comments about the potential upside for gold.
Yeah, so you're making very bullish upside about the potential for gold. Well, where is that reflected in the share price? So if I'm looking at developing I'm a gold developer with a bank-ready, finance-ready project in West Africa, my share price has gone up, but it's not reflecting the current gold price. So why would I do an equity only, why would I raise the equity to build that mine? Why would I not use debt? If I'm going to use debt, some of the lenders, the most sort of cost-effective lenders are going to say, well, we'd like you to lock in some gold. And I think if you find some of the older people around, or the people who've been through cycles in the industry like myself, who go, well, yeah, everyone's saying the price is going up. But the most bullish environment I ever lived in a gold market was in 2011. Yeah, and we all know what happened after that.
That was a long time ago now.
Well, it was longer for you than for me. But, but no, 2011, like everyone was super, super bullish. Why would you hedge at 2,000? It's going to 2,500, and it promptly went to 1,300 US, right? So I think people remember that. And at the end of the day, if you hedge to support debt and you minimise the shares on issue, if the gold price does take off, it will be reflected in your share price. There is no better example than Capricorn. Capricorn's probably the best performing share in its peer group in the world. It has a crappy hedge book, but that reflects the prices at the time that they did, and a few decisions they've made afterwards. But generally, that just reflects the price on the day when they did it. Now, 30-cent share price. If they built that mine with equity, they'd have 3 times as many shares on issue today as they currently have. So instead of having a, $6 share price or whatever it is today, their share price would be $2 for the same market cap. So that hedging has made a profound benefit to the shareholders of Capricorn. But importantly, they built the mine and delivered the mine that was in the model when they did the financing. That's an important part of it. Some of the more recent examples that we've seen where people have blamed hedging for the company's woes, it's been a failure of mining, not a failure of finance. The mines just simply haven't delivered. Mines are not spreadsheets, but everyone kind of has this spreadsheet and says, that's what we're going to do, look at the bottom line. But the 57 different inputs, or whatever that go into that, you mess a few of those up and the money just doesn't come out the other end, regardless of the gold price.
I am going to quote you ad nauseum. Mines aren't spreadsheets, and everybody does need to remember that. I am going to let you go, but for everybody listening, I want to bring out one fun fact, because you have been an old timer of the Australian gold industry. Sorry, a guardian of the Australian gold industry.
Thank you.
For everybody listening, what's a chalky?
What's a chalky? Yes, when I failed as an Air Force pilot and came back to Sydney to work, I answered an ad in the paper to be a post clerk at the Sydney Stock Exchange. And to be honest, I thought it was in the mail room. And I was just my dad was saying, you've got to get a job. A chalky was a post clerk. You stood on the post at the stock market. You had piece of chalk in your hand and a piece of foam in the other hand. And when people said, I buy BHP, you would write the number of the stockbroker down, and you see those old footage of those guys. I didn't live in the days where they slid them up and down like an old sash window. We just had a blackboard, but we run along writing that down. And when you got good at it, you remembered the numbers of all the stockbrokers by their company, so you never turned around. So you could hear it, you would know, and you would run along, and we would do that for 3 hours a day. 3 hours a day, got paid for an 8-hour day, best job I've ever had.
And everyone, that is exactly why I wanted to talk to Sean. Sean, thank you for being here.
Oh.
I'll let you go.
Nice to chat.
Nice chat.
Thanks.